All right, there we go. So, wait 1 second.
Oh, there we go. All right, yo, what's up for y'all watching this on the YouTube replay? I hope you're having a good Sunday. And check this out. We're going to be doing a stock portfolio update. And then in 14 minutes, the market opens and we'll get to see what the stock market does because that bill just got passed. It was called the Big Beautiful Bill, and it's supposed to be good for stocks. I guess we'll see how it reacts because it got officially passed. And I guess we'll see how the S&P 500 does. And then we're going to be looking at some of your stocks live and doing some analysis on them. So here's my main taxable account right here. We're up 7% year to date, which is pretty good. And these are all the stocks that we own in here. You've probably heard of some of these before, like McDonald's. They paid me a nice dividend. I have Meta. I got Google. These are some nice dividend growth companies. You know, I'm not really buying Meta for the dividend, but I'm buying them for the dividend growth. And then we also have a Roth IRA. You know, it just hit an all-time high, I think. We started it basically a year ago exactly. But yeah, these are the three stocks we own in here. I got some higher yielding names like Main Street Capital. This company just paid a special dividend. So look at this. I only have a $600 position in this company, you know, not much. But what's cool is they pay you a monthly dividend, $2.50, and they just paid an extra $3 special dividend, which is pretty cool. And then let me show you here my growth portfolio. Ooh, hopefully you can't see the password there. Oh well. But this is my growth portfolio where I basically just buy growth companies, and we're up 12% all time in here. You know, not the best performance all time. And let me show you the year to date. I think we can see, yeah, look at that. This is the money weighted return. We're up 21% year to date in here versus the S&P 500's. I don't know. What is that? Well, it's not telling me. Oh, well, but we're beating the S&P 500. We've received some dividends, which is cool. But anyway, let me show you what stocks I own in here. I got some risky names. Like I like to buy some small positions in some growth companies and let them grow to bigger positions, like a SoFi, a Reddit, a super microcomputer. Here are my three most recent purchases, by the way. I bought T-Mobile. We're only up 2% on them. I bought FUTU and PSIX. Now, we literally bought this stock 2-3 days ago. I've been kind of pitching this one for a while, and the company's done great. It was up 11%. I recommend, again, not financial advice, put this one on your watch list. So I wouldn't buy this one right here at all-time highs. I'd probably wait for them to fall another 20%, which they might. But they're now printing net income. I mean, they've really grown their margins. They're back to growth mode, and they're profitable with basically no net debt. So that's what's cool about them. That's my most recent purchase. And of course, we have some losers in here, like UiPath, Zoom, TAP. These are some of our other losers as well. So yeah, that's the portfolio here. And then we also have another portfolio. Yo, what up, big mans? Yeah, he said bull. Yeah, we're on the bull app right now. And then we also have our buy and hold portfolio, where once I buy a stock in here, I try to never sell it. I try and just hold it on for the long run. And these are all the stocks that we own in here. You know, we got some good winners and we got a loser in here. Yo, what's up, Not Fates? How's it going, guys? Yeah, if you guys got any stocks you want me to look at, let me know. Happy Sunday. And yeah, I wonder what stocks we're going to check out next week. So Webull right here, this is ticker symbol BULL. They just IPO'd not that long ago. They have a bit of a complicated share structure because only 5% of the shares are like available to trade. That's where there was so much volatility on IPO day. But the market cap is a $6 billion company, you know, and we compare that to like a Robinhood. Robinhood's worth like 80 billion. So this is like a tenth of the size of a Robinhood. But the good news is about Webull, if we head over to the net income right here, they are actually making net income in the two most recent quarters. So they are making some profits, which is cool. So I got to do some more research on them. But I know I've given them a lot of money because here's my account right here. I've probably given them a lot of transaction fees. So yeah, let's see. Will you get a good entrance on this company? Yeah, big mans, what's up? He said MD. So this is Mondelez. So this is actually a really cool company. They own like Chips Ahoy. They own Oreos. They own Sour Patch Kids. They own a bunch of like popular brands that you've probably heard of. So yeah, they're like kind of like a PepsiCo. And check this out right here. They have a nice yield, a 2.66% dividend yield, only a 50% payout ratio. Let's see where the revenue comes from. So biscuits and baked snacks. Oh yeah, this company owns Toblerone. If anyone's heard of that, like triangle chocolate, they own that, which is cool. Oh yeah, look, chocolate. That's 34% of the revenue. Then they're in gum and candy, and then they're in cheese and grocery, and then they own some beverages, which is cool. But yeah, they're making a lot of money, like close to like 3.5 billion of net income a year. So yeah. SK, what's up, dude? He said, what stock are you buying this week? So I will say it's tough buying anything right now at all-time highs. Like selling calls doesn't sound like a bad idea, but one stock, I don't really care if I'm buying this company at a bit of a higher valuation than normal. I'm looking to just build up my shares in Google. I'm only up 11%. I don't mind really buying more, but yeah, Google, I own 19 shares of them. I do own them. And here's what I love about them. They're such an innovative company. They own Android. They get the Google Play Store fees. They own YouTube, of course. They own the Google Cloud business. Like, look at this actually. Look at just the Google Cloud revenue. I like looking at the numbers so we can understand the financials. Like, look at this annual Google Cloud revenue growth. That's now 43 billion, and they're finally like having incredible margins on them. But this is the best part about Google, the net income and the revenue. So if we look at this right here, the revenue, it grew 12% year over year. So pretty nice growth. They grew the revenue 12% year over year, but the net income actually grew 45%. What does that mean? That means Google's actually growing their net margins. So I just like looking at the financials. I just really like Google. They also own Waymo. They have their own, they're going to be the leader in quantum. We could actually go to the quantum portfolio. I think it's at the very bottom here. Yeah, Google, Oracle, IBM, these are going to be the industry leaders for quantum because they have the money and the talent to be the industry leader. Yo, what up, Flip Flop? Staples like MDLZ is not at all-time highs. You're right, like Pepsi as well. Pepsi is well off all-time highs. They're actually like not doing good at all. Like, yeah, look at this Pepsi chart. It's not great. When the S&P's at an all-time high, this isn't. And also, if we go to the dividend right here, if you buy Pepsi stock, you get a 4% dividend, which is pretty cool. The payout ratio is getting a little high, but that dividend should be safe. Yo, what up? Vin said hood stock. He said my whole portfolio is in hood. Yo, that you might want to have some diversification, but Hood has been an incredible winner, and I own them as well. I sold most of my shares a long time ago because I was up like 400%, and I shouldn't have sold it because it just keeps on hitting all-time highs. It actually hit $100 2 trading days ago. So yeah, we're up like nearly 600% on this company. Here's what's so great about Robinhood, in my opinion. It's just the growth of this company, and they're so innovative. They're introducing new assets you can buy. But look at this revenue growth. The revenue actually grew 50% from the previous year. That's really impressive growth, and the net income as well. So a lot of people are starting to take Robinhood serious because they're literally making hundreds of millions of net income a quarter. When if we zoom out to kind of when they IPO'd, this was a tough buy. Look at that. They were losing hundreds of millions in net income a quarter. So it's great to see that they're finally profitable. So I do own them. I love the fintechs right now, like SoFi, Robinhood, Dave. These fintechs have been doing amazing. So Google's really slept on. Yeah, dude. I think the valuation, they're trading at like 20 times net income, for a Mag 7 stock like Google. I think they could go up a little more in valuation. Hello, I just started back on. Yo, what up, Jess? That's awesome, dude. So let's see. Someone said NISN. Yeah, if you guys got any stocks you want me to look at, let me know. So, okay, so this one doesn't really meet the criteria of a stock we'd really cover on this channel. Or, they're a $19 million company, and they're at all-time low. So think about that. I'll analyze them just for you. But remember, this is a $19 million company. That's extremely risky. And they have no revenue. This is from 2021. So this is a revenue-less company, literally no sales, and they're at all-time lows. And wait, what about net income? Can we see that? No, we don't have data. So yeah, that one looks really risky. Let's see. What do you think about Oracle? Yo, Northern, how's it going, dude? Yeah, Oracle's been crushing it. This is like your main cloud play and their main cloud service provider, and they're doing amazing. Look at that one right here. There was also a rumor that TikTok was going to get bought out by a U.S. company. Like on the poly markets, they're saying there's a high likelihood that Oracle is going to buy TikTok, which I don't know. That's interesting. But besides that, this is a really great company. So let me look at the stocks at an all-time high. I will say it's tough to buy this one, right now at all-time highs. But check this out. If we look at where this company's revenue comes from, 85% of the revenue comes from their cloud and licensing revenue. So yeah, most of it from the cloud business. And also, here's the best part. Look at this net income they're making, the actual profits. They're making literally $3 billion of after-tax profit of net income a quarter. And it's kind of just expected to keep on growing after the SoftBank deal and stuff. So yeah, and you get a dividend, a 0.8% dividend yield basically. So yeah, congrats if you own that one because that one's done great. Let's see. Energy Transfer, Futu. Oh yeah, hey, remind me to look at Futu. I that's what I'm on right now. Yo, Cruz, good to see you, homie. Hope you're doing well. Happy Sunday. So, thoughts on CEG? I was told by an insider they have a big pump incoming. Hey, that'd be great. That's actually my second largest holding, or actually, out of all my stocks, this is my third largest holding. It grew to that position because we're up 51%. But what is Constellation Energy? This is the largest nuclear energy pure play out of any stock out there. They actually own 50% of all the US nuclear energy reactors. And Trump is really bullish. He likes nuclear energy. He wants to, he sped up the 3 Mile Island restart plant for Constellation Energy early. So anyway, this is and they're also merging with Calpine. It's going to be instantly accretive, $2 of yearly EPS for them. So there's just so much earnings tailwind for CEG. They've been one of the best performing stocks. So this is your main clean energy US play. And I believe in 5 years, this is going to be the largest utility company in the entire US. And they already are. But they're in second place right now. All right, so here's another energy play, but this one isn't so much the same. This is like oil and gas transportation. So yeah, this is ticker symbol ET right here. This is actually an MLP, a master limited partnership. So I will say be careful because when you buy this stock, you'll actually get a K1 tax form. And those are notoriously complicated to fill out. I accidentally bought an MLP when I first started. It costed me like $300 with an accountant to get it filled out. But because this company is an MLP, a master limited partnership, you actually get this crazy dividend, a 7.15% dividend. And that's the best part about this company. You get some nice stock price appreciation, but the dividend is the main part there. And yeah, that's what's cool. And we can see where the revenue actually comes from, just so you can get a little bit better understanding of like what the company actually does. I just heard they reached a deal with TikTok today. Hey, that'll be interesting. I do wonder about that. So here's where the revenue comes from: natural gas, liquid, LNG, crude oil, transportation. So yeah, they basically just transport. They own a bunch of pipelines and stuff like that. So that's what's cool about them, and you get the nice dividends. So someone said FUTU stock in Amazon. Yo, I want to look at Amazon as well. Remind me to do that. But I do actually own this company, by the way. I will just be transparent. If we go down here, I do own 8 shares of this company right here. 8 shares. And what is this stock? Well, it's actually this app that I'm on right here. So it's this app that I'm on right now, publicly traded, FUTU. If you want to get this app, or it's a brokerage, it's in the link tree in my bio, the first link there. But look, this is crazy. They traded a super low valuation, a 20 PE. We can kind of see some of the data. Like they have 26 million users. Client assets are at 106 billion. But the best part about this company is actually the growth. If you look at the revenue, it's 600. This is in US dollars. It's 600 million, up 83% year over year. And if we look at the net income, it actually grew 108% year over year. So the best part about this company are the margins. They have a 45% net margin. So that's incredible margin. So literally half the revenue is converted into net income. So very profitable company. They even made so much that they just did a special dividend. They basically returned 2% of your money back to you instantly in a special dividend because they were making so much money. Because they don't pay a dividend, a regular dividend. They're doing a lot of buybacks. So I really like them. Let's see. So yeah, I do own Amazon right here. This is in my buy and hold portfolio. So yeah, once I buy a stock in here, I try and like never sell it. And one of the stocks I think is just such an innovative company to just never sell is an Amazon. Ooh, let me get my drink real quick. And look at this. Here's what's kind of cool. This app is telling me, what is this? A bullish continuation triangle. So that's more of a technical analysis. The rise probability was a 95% chance. But hey, Amazon's such an innovative company. They're the world's largest robotics company, and they're an advertising stock. Look at this right here. This is what a lot of people don't actually understand. Only 38% of the revenue comes from their online stores, so from Amazon.com. Then 25% comes from their third-party seller services, but then they have the Amazon Web Services. Amazon's actually a cloud provider, and they have the #1 market share. That's actually the most valuable part of Amazon, if you didn't know. They're Amazon Web Services. And look at this. It's now over $100 billion of annual revenue for them. And, they're also an advertising play. Look at that. 9% of the revenue comes from advertising. 7% comes from their Prime subscription. And then they have some physical stores. Remember, Amazon bought 365 Whole Foods. So that's pretty cool as well. And also, this is a company that's rapidly growing their margins. So if you look at the revenue, huge numbers, 150 billion in the most recent quarter, but it grew 8%. If we go to the net income grew 65% year over year. So what does that mean? Basically means, look at this, their net margin, it's now an 11% the most recent quarter. Look at that on the right, 11% for 2025 Q1. If we zoom out to 2023, it was single digit margin, 6, 7, 8% margin. So they just keep on growing their net margin, more profitability, more EPS. They're just such a cool company. So I thought a lot of people didn't know that they're way more than just their website. Yeah, try not to spam. Yeah, what's up, brother? He said Pony AI. Yeah, what's the ticker symbol for Pony AI? And I'll check it out for you. So Boo said STX. Is that constant or this is Seagate Technologies? Wait, STX. Yeah, let's check it out. So, wow. First off, congrats if you own this company because they're literally at an all-time high, pretty much. So, yeah, if you've ever bought this stock, you got to be up on your money, and they pay a dividend. So, if you bought this stock right now at all-time highs, pretty much, you'd still get 2% of your money back in a dividend, which is pretty cool. Manufacturing and distribution of storage solutions. So this is a little concerning. This says 2024 Q1. So is this like a year old data? I don't know. Oh yeah. So yeah, here's the most recent data. Oh yeah, the growth is back now. Wow. Yeah. So revenue's up 30% year over year. Net income. Look at that. They're printing money now. A couple hundred million of net income every quarter. So wow. That's actually really impressive that the amount of net income that they're making. So that's why they can afford the dividend. Jeez. So yeah. Someone said NOTE stock. If this is a small market cap, we'll see. Yeah, $118 million company. I try not even to talk about these companies because they're just so. Yo, Mad Pac Man, thanks for the rose there, dude. I really appreciate you, Mad Pac. If you got a stock you want me to look at, let me know. I appreciate you, brother. But yeah, this is. I'd be really careful about this. This stock, yeah, they're losing money every quarter. So yeah, $100 million company, you just can't really trust this stock. Low liquidity, anything can move. What are your recommendations for profit? Yo, I'm just buying Google this week. What's the best app for someone to want to? Hey H, my favorite one is just this app I'm on right now. Best for analysis, best for beginners, in my opinion. If you want to get this app, it's brokerage. Linktree in bio, the very first link there. It's an affiliate link too. So it's. But anyway, let's see. PONY stock. So Pony AI. So let's see. Oh, I remember this company actually. They have a huge cash position. So they just IPO'd literally 6 months ago. So they haven't been out for that long, but they're a $4.5 billion company and they didn't have much revenue. Like if we go to the revenue right here, it was 13 million the most recent quarter. So not much, but I really like their balance sheet. So check this out right here. If we go to their cash, they have $700 million of cash and no debt at all, literally no debt. So over 10, roughly like 20-25% of their market cap is just their cash on hand. So but that being said, I would still be careful. I don't know much about this company. There's not much revenue, like 13 million the most recent quarter. I still got to do more research on them, but because they just IPO, there's not too much history, but they're interesting. Let's see. TSSI. What is this stock? Wow, look, $700 million company, and the stock's at an all-time high today. Yo, J Crump, no way, dude. J Crump, thanks so much for the roses, dude, for the 4 roses. I really appreciate you, man. So yeah, $700 million company, stocks at an all-time high. Are they profitable? So they're in procurement. I don't even know what that is. Uh, but the revenue grew like crazy. Yeah, look at that. The revenue went from 15 million to 98 million, an incredible 500% jump. And they made net income on that. I can't believe that. So actually, I'm going to add this one to my watch list. If they keep up this net income, I mean, this company's you're getting like 10% of your money back a year in net income at this market cap. So there could potentially be more upside room. Yo, no way, Cruz. He donated $1.99 through Super Chat. I really appreciate you, homie. Let's get it this week. Absolutely, dude. And hey, Sandy, what's up? She said NVG stock. What's this company? Hey, thanks again, Cruz. You're always here for me. I really appreciate that, brother. Yo, that's on the YouTube stream. Yo, I'm streaming on YouTube and TikTok right now. So if y'all want to support me for y'all on the TikTok stream, go check out my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. If you missed anything, you can replay it. So this is NVG. It looks like an ETF right here, or it's a fund. Let's see. What are its top holdings? So these look like a bunch of bonds. So it's basically a bunch of IOUs. What's the yield on this company? It must have a high dividend yield. That must be why. Yeah, so a 7.88% dividend. The dividend, if you noticed, kind of goes down every year. That's not a great trend. This stock price appreciation, I'd be careful. Yeah, look at that. All time, this stock chart doesn't look great. It hasn't outperformed the market in the long run. So yeah, I don't know about that one. I got to do more research. That one looks a bit interesting. How about RTX? Hey, what up? So this is a aerospace and defense company. So if you're looking for a stock like that, because this sector has been on fire with all the war fears and stuff, the aerospace and defense industry has done great. And look at this, RTX is at an all-time high. They own a bunch of the aerospace companies. Like, look, Pratt & Whitney, they own Collins Aerospace and Raytheon. Raytheon just got a bunch of contracts with the U.S. military. So I really like this company's assets, and they're really profitable. I mean, if we go to the net income right here, they had a one-time adjustment that one quarter, but they're pretty much making over 1 billion of net income every quarter. I mean, they're doing pretty good. Gotta go. Hey, have a great one, Cruz. Thanks again for stopping by. Happy Sunday. Thanks again for the 299. Yo, Jeff Mack, what's up, dude? Let's see, Cortiva right here. Look at this one. It's at an all-time high today. Like a lot of stocks, the market did close at an all-time high on Friday. So $50 billion company. They're a big market cap, and it looks like they IPO'd in 2019. And they're at an all-time high right now. Let's check out what they do. So seed and crop protection. That's such a boring industry, crop protection. But look, this boring industry has had not so boring returns. Let's see how it's doing. So we go to their annual revenue right here. It's a bit slowing. Oh, so the seed revenue looks like this one just hits a record every year. What are their margins? So let's see, are they profitable? It's a bit choppy. But overall, if you average out the 4 quarters, they're definitely making net income every quarter, like a couple hundred million a year. So there's a lot of room for like margin improvement here. But there must be some good news here because the stock's at an all-time high. This is amazing. So yeah, hey J Crump, what's up, dude? Thanks again for all the roses, homie. He said BULL stock. So yeah, this is Weeble right here. Hey, yo, what up, Nico? He said Workhorse. What's the ticker symbol for Workhorse? I'll check it out for you. I got you. Wait, what did I just click on? Weeble right here. Okay, so this company just IPO'd literally a couple months ago. A couple months ago, and there's only 5% of the shares are available to trade. So that's why there was so much volatility this day. And I think that this one could eventually turn into like a Robinhood kind of stock where they track with what they do what Bitcoin does. Because they're only a $6 billion company. So that's a very small market cap, a $6 billion company. If you notice, if you look at the after hours market right here, they fell 6%. They basically diluted you by $1 billion. They issued like $1 billion of stock or something. That's why they fell after hours. So I got to do more research on that. But the good news is if we go to the net income here, this is a profitable company, or at least in the 2 most recent quarters. They made 10 million, 12 million. So I do like that they're profitable. Yo, Mad Pac-Man, how's it going, dude? Thanks again for the gift. He said REGN. So this is Regeneron. So there's some good news and bad news about this company. They're at a super good valuation, but here's why the stock fell so much. If you're wondering what happened, they own this eye product. It's called Isla. And here, I'll just show you this. It should show us down here. Yeah, so they own Isla. And basically there's another company that's making the exact same thing that infringed on their patent. And Regeneron went to court and they basically said that, oh no, they're allowed to use it. So their patent, the multiple got lowered because the patent isn't valuable anymore if anyone can use it or something like that. Anyway, if we go to the Isla HD sales, they're doing pretty good. It's up 53% year over year. That's like the higher dose version of this because this is down 38%, but they have like Isla HD, which is doing really good. But they have a bunch of other prescriptions as well. Like that's only a small, 35% of the business is at risk. But anyway, the collaboration revenue, this is up 20% year over year. If we go to the valuation of this company, the PE ratio, where is that? Look at this. They're trading at a 13 PE, very low, very fair valuation. The dividend yield, they just started paying a dividend, I believe. Morningstar has us at 730. Did they actually cover this though? Let's see. I wonder if they do. So, hey, look at that. Regeneron's application for U.S. approval of Isla HD. Yeah, I like this. It tells you what the bulls are saying and what the bears are saying. So, hey, if you own this stock, I'd maybe screenshot this. Isla, anyway, they're a healthcare play. So let's see. So Nico, I can look it up for you. Workhorse. Horse? Oh, WKHS. Okay, I found. So I hope this isn't the stock you're talking about. I don't really cover these kind of stocks on this channel. If you look in the top right, how much this company is worth, the market cap, they're a $13 million company. That's in the stock's at an all-time low. Buying this is like a coin flip. I would stay away from this company. Yeah, look. And they lost $20 million in the most recent quarter. So just think about this logically for a second. You can buy in a company that has a $13 million valuation. You could buy a lot of shares at this $13 million valuation, but you're buying a company that literally loses $20 million every 3 months. So just stay away from that one, man. What do you think about Honda? Yo, what up? Yo, what's the ticker symbol for Honda? Are they public? I didn't know that. I don't think they're an American. Are they American? Last one, Tempest AI. Hey, this is a Nancy Pelosi play. Actually, here's Tempest AI right here. And I really like this company. They're very niche, actually. Check this out. They're in the genomics and check out the revenue growth. I mean, this is what I look for in a company, ones that are growing the fundamentals. And check this out. The revenue grew 89% from the previous year, literally to a new record. I mean, look at that. 2025 Q1, a record revenue, 89% growth. So incredible growth. That checks the box. Also, the data and services business, don't count this one out either. It grew 44% from the previous year. So this is just a nice growth company. And they're not making net income right now. So they're not net income positive, but that's all right because they're a growth beast. Yeah, revenue's up 75% year over year. So yeah. Oh, the market opened. Hold on real quick. We got to go check out what the S&P 500's doing. How's our portfolio doing? Whoa, we're up 0.4. Hold on. Wait, how are we up 0.4 and the S&P's down 0.3? Oh well, we'll come back to this. Let's see. I'm in Tempest AI too. Hey, that's what's up, Moj. Hey, I'll check out Honda too. Bitcoin said Palantir. Yo, this is a huge government play. So Palantir stock is at an all-time or close to an all-time high. Or they're like 10% off all-time highs, but they are everything investors wants. Their government, their AI, their growth, their contracts. Look at this. 55% of the revenue comes from the government, and look at the growth here. The government contract revenue grew 45% from the previous year. So many police stations are using Palantir's, software. Also, if we go to the commercial revenue, which is like with S&P 500 companies, like random things like ice cream shops, a lot of like, I don't really want to explain what they do, but it basically tells you, like it factors in, hey, how many employees should I hire today? If I'm an ice cream shop, it factors in like, the soccer game gets off right here. So yeah, you want to have 3 employees today because you'll have a more likelihood of people coming in. Anyway, look at the commercial revenue. This grew 33% year over year and they're profitable. We go to the net income right here. I'm sorry, I'm at a hotel and this Wi-Fi is really bugging right now, but they're making net income every quarter. And if we go to the balance sheet, this is a monster balance sheet. They have no debt at all, lots of cash, and they're making interest on their cash. So how has your weekend been going? Can you take a look at KULR? Yeah, what's up, Applesauce? Hope you had a good weekend too. So we'll check it. I think this is I don't remember. It might be a quantum play. Then we'll look at Honda, HMC. Yes, sir. What up, Casey? How's it going, dude? He said Pepsi and Oracle. Yeah, we'll look at those two. So here's Kohler Technology. Did they just pay a dividend or did they reverse split? They did a 1-for-8 reverse split. That's interesting. So yeah, I don't love this one just because it's such a small company. This whole company's worth 200 mil. I don't really like to cover these kind of stocks, like just because they're so risky, $200 million company, but I'll check them out. Let's see. I wanted to stream still. So look at this. So, look, they're a Bitcoin mining company. 10% of this company's revenue comes from Bitcoin mining, but energy management. So that's interesting. You basically, for these Bitcoin mining companies, you want to go to the balance sheet, see how much Bitcoin they own. And look at that. Looks like they have no debt and lots of assets, which are, the Bitcoin that they hold. So that one is like a Bitcoin proxy, I believe. I think. So HMC is Honda Motor. Okay. So yeah, they're a Japanese company. So the stock has kind of been, look at that. So Honda's the same price as they were back in 2006. So the stock's done nothing. I think they have a nice dividend though. Let's go check. Yeah, look at that. So if you buy the stock, you get 4.4% of your money back a year in a dividend, which is pretty cool. What's the PE? The PE is an 8. Super low valuation on this one. Automobile sales, automobile production, down 6% year over year. So yeah, obviously we know they just sell cars and stuff. What just happened? Their margins just collapsed. So sales were flat year over year. So the sales aren't really growing, but the net income dipped 80% year over year. So if you go to their net margin, it collapsed to just a 0.8% net margin. So that's something that might just be a one-time adjustment though, but that's not a company you probably want to buy because it won't probably outperform the S&P 500 in the long run, but they got that nice yield. I know Ford has a nice yield. Hey, Ohi, Unique. What's up, dude? Thanks, man. I appreciate that. Okay, he said FICO. So yeah, dude, FICO. So this one owns, the FICO score. Whenever you're making a big ticket purchase, you buy a car or a house, you're paying like $5 for your little FICO score, and or you and the bank combined or whatever. They've had a lot of pricing power recently, where they're able to charge. Who really cares if your little FICO score money goes from $5 to $8 or $12? So they've had a lot of pricing power recently, and that's why the stock has performed so well. Been one of the best performing stocks. But recently, there was this huge dip right here when the government basically came in and said, we don't want FICO scores anymore. We're going to make our own kind of score. And that didn't help the stock, but they've been slowly recovering since then. So I do got to check if that's really going to hurt the thesis in the long run. But if we look at the FICO score growth, it's gone nuts. It's a new record every quarter. Yo, Casey, what's up, dude? He's in Stinky. How's it going, dude? He said Pepsi stock right here. So yeah, this one, the market's at an all-time high right now, but Pepsi's been kind of struggling. So I do think this one's actually at a decent buy the dip opportunity, especially if you're a dividend investor, because check this out. If you go to the dividend right here, you get a 4% yield, and the payout ratio is a little high, 76% payout ratio, but a 4% dividend yield. I trust Pepsi. I think that their dividend's going to be safe. I mean, look at this net income. They're making easily $2-3 billion of net income a quarter. So, yeah, I like this one. Yo, Tallahan, how's it going, dude? He's long time no see, dude. You too. If y'all don't know, this TikTok account I'm on was banned a couple days ago. It was banned for 2 weeks. It was permabanned, and we just got the account back a couple days ago. So I'm scared my account might get taken down again. So if you want to support me, please subscribe to the YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio, first link there. I'm streaming on there as well. If you missed anything, you can watch the replay. So here's Broadcom. This stuff, and I don't sell anything either. I don't got a course, a book. I got nothing. So watch out for people impersonating me. So here's Broadcom right here. This one is kind of coming for NVIDIA's lunch. They've seen some incredible growth. This stock's at an all-time high. And you get it. That's the thing, though. When you buy this stock, you actually get a pretty decent dividend, because with NVIDIA, you get no dividend, or pretty much no dividend. You get a 0.8% yield. Since the stock's at an all-time high, that yield is low. But a lot of people know Broadcom for the semiconductor solutions, but I really like this one as a software play. You won't believe this growth. I mean, look at this. In 2023, it was $2 billion. It was $2 billion. Then they did this acquisition, and they've just seen incredible growth ever since. So really, look at that record. I mean, if we go to on an annual basis, I mean, look at that huge jump. So that's what I like to see for Broadcom. And if we go to the profits here, this is FCF. This is free cash flow, $6.4 billion the most recent quarter, up 44% from the previous year. So they're printing money, man, and they can afford to do dividends, share buybacks, reinvest in the company, all without diluting you. So I do like that. I sincerely hope you hopped on Dave. Remember I told you about it at 82? Yo, Tallahan, you're going to be proud of me, brother. You're going to be proud of me, because I remember I never heard about this stock called Dave. And then someone must have been Tallahan, told me about it, and I loaded the boat on this company. Yeah, let's go, Tallahan. So yeah, check this out. We bought it $78 a share. This is a fintech. It was Tallahan that recommended it. And I'm like, this has great fundamentals. I added it to the watch list. I eventually bought it. Look, we actually just took some profits on here. So we bought 7 shares at 78, and then we're selling a little bit at 272. It was hard to not sell. We have a lot of stocks like that, like Robinhood. It was hard not to sell this stock when you're up 400%. But what's crazy is Robinhood just keeps on going higher. I regret every share I've ever sold of Robinhood, SoFi. A lot of companies are like that. So when you're buying high quality companies, usually your biggest regret will be selling out of them. So make sure don't sell your roses to buy weeds, or I forget what the saying is, or something like that. Someone said PaySign. What's the ticker symbol for PaySign? I don't know that one. So Celerate said CRDO stock. What's that one? CRDO, Credo Technologies. This one's on my watch list. So let's see. A $16 billion company, and they're at all-time highs right now. So congrats if you own them. They're on my watch list. I don't remember this company, but I must have liked them. Let's check out the revenue growth right here. So, whoa, this is why I like them. I love growthy companies, ones that the fundamentals are really growing. And look, the revenue's up 180% from the previous year. Incredible growth. And also, if we go to the net income, they're profitable now. They made $30 million the most recent quarter, $30 million the quarter before. So I see why this one's at all-time highs, and they might just keep on going. Yo, Zero T, thanks for the rose, dude. I really appreciate that. If you got a stock you want me to look at, let me know. I got you, brother. I sold out on Tesla, the crash about Tesla. Okay, so, Tesla. You know what? Hold on. I'm gonna lose some followers for this. Hold on. Let me go get my friend Elon. Okay, hold on. Yo, Elon.
Tesla to the moon. Moon on Tesla. $10,000 stock price.
Okay, hold on. So, real talk though, the thing about Tesla is the real growth in the future of their market cap is going to come from their robotaxi network and the robotics. Because right now, if we go to the automotive business, it's not, the voice changer was probably terrible. It didn't even sound like him. Yo, dude, whenever I did that AI thing, TikTok just said your live is been restricted. Literally right after I did that. Okay, that's not good. Anyway, appreciate y'all being here. Tesla kind of lost their growth. If we go to the automotive revenue, it is down 16% year over year, but they do have this energy generation business, which has seen a lot of growth, but it's up 67% year over year. So that's some nice growth, but the margins have kind of collapsed here as well. The net income was only 420 million in the most recent quarter. It fell 70% from the most recent year. So yeah, if we go to the net margin, just at 2%. So it's tough. Yo, Zero T, thanks to the 25 roses. I really appreciate you. Yeah, I might start doing the voice changes more. Fiserv stock, ticker symbol FI. Yo, we'll look at PayPal as well. What's up, Jeff Mack? Yeah. So FI stock. All right. Hopefully this loads. Okay, Fiserv. I've heard of this one, but I think this might be a fintech. So $97 billion company. Maybe I can't do the voice changes, dude. The TikTok has a restriction on my stream now. It says it won't be recommended to new viewers. So thank you, TikTok. But anyway, yeah, so half this company's revenue comes from their financial revenue. Then they have merchant revenue. How's that doing? Might as well see. So that's up 5% year over year. How's the financial? So financial's up 6% as well. So both revenues, so the revenue should be up, 5% year over year. Net income's up 12%. So yeah, this company's making a lot of money. Look at that. Nearly a billion of net income a quarter, actually. They don't pay a dividend. They're probably doing a lot of share buybacks. Morningstar has it at a $200 stock price. So actually, it's a little bit slower growth, only 6% revenue growth, but still they're printing money. And another one kind of in the fintech industry is PayPal right here. So PayPal, this one, it's rough because the valuation of this company, they're trading at a valuation where they're not really expected to gain or lose you any value. I mean, that's a 17 PE. That's really cheap. But here's why the PE ratio is so low. Because if we look at the revenue only grew 1% from the previous year. So not that great of growth. That's the lifeblood of the company. Revenue's up 1%. But if we go to the net income, they're printing money, over $1 billion of net income a quarter. Yo, Stefan, he said, what app is this? Hey, it's a brokerage. If you go to the link tree in my bio, the very first link there, you can get it. Yo, Trevor Brown and Patrice, how's it going, guys? Happy Sunday. But yeah, the net income grew 44%, so that's great news for their net margin. Look, net margin was a 16% in the most recent quarter. Look at all the other quarters. It was nowhere near 16%. So it's good to see that they're growing their net margin a bit, but PayPal has been buying back their own stock like crazy. I'll show you this real quick. Y'all actually aren't going to believe, I'll be super quick about this and then we'll get to the next stock. But I just want to show you how important these share buybacks are, and it's better visualized over here. 5 more seconds and then we'll be on the share buyback. So yeah. So with each stock, there's total common shares outstanding. Classic TikTok and their rules, yeah. So hopefully, there we go. The phone there we go, okay. So if we look at the total common shares outstanding, it's in the bottom left now. 979, down 7% from the previous year. You literally own 7% more of the company than you did 1 year ago, since there's 7% less shares that exist. So look at this. There's 979 million the most recent quarter. Let's go to 2020. There was literally 1.2 billion shares. So they're just a buyback machine. That's where a lot of PayPal should be paying a dividend. PayPal is the kind of stock that should be paying a dividend right now, but instead they're just buying back their own stock since it's so suppressed. This company was probably going to pay a dividend one day. You'll get like a 2-3% yield on cost. So they're interesting. Wendy's stock. Yo, I haven't looked at Wendy's stock. I can't even remember the last time I did. This one is unfortunate because they've been struggling with their margins. Look at this. Wendy's is the same price as they were back in 2004. So tough tough on Wendy's. You haven't really made any money if you've held this one. So check this out. The dividend yield is nice though, 8.6% dividend. But look at the payout ratio. It's over 100%. So and the stock kind of agrees that this dividend is going to have to be cut, which is unfortunate. If we go to the net income, it's not too terrible because they're still profitable every quarter, but they can't afford this high yield. They're making, 40, 50 million of net income a quarter. So that's the good news that they're still profitable. But yeah, sales fell 2% year over year. I like McDonald's more, and I do own that one. Because McDonald's is really a real estate royalty company. If you go spend $100 at any McDonald's, $4 of that goes back to the stock, the parent company, as a sales and marketing royalty. So McDonald's also owns the real estate under like 80% of the stores. So McDonald's is actually a real estate royalty company. Yo, Mad Pac-Man, dude, no way. Thanks for the little summer sun, 20 roses. I really appreciate that. Good evening, new follower. Hey, Smile. Thanks so much for the follow. I really appreciate that. Let's see. Can you look at PAYS? Yeah, let's do it. Yeah, I got you. PAYS. So that must have been PaySign. Okay, yeah. Let's check out this company right here. So, wow, this company has rocketed the past couple of days. I mean, look at that stock price appreciation. So, congrats if you own this one before today. Let's see what they're doing. So, vertically integrated provider of prepaid card products and processing services. So anyway, the growth here is incredible. Look at that. That might be why the stock's doing so good. The revenue grew 41% from the previous year. So very nice growth on the revenue. Are they profitable on that? That's why this, what? I'm going to add them to the watch list. They're making net income now. That's great news. So what's the market cap? If you're going to be making 10 million a year, yeah, dude, you're going to get like 4% of your money back at least a year just in net income. So that one's interesting. Let's see. Yo, J Crump, thanks again. 4 roses. I got you, dude. He said PENG stock. Yeah, thanks again for the 4 roses. Hey, so this app is telling me there's some technical analysis here. What is this? So a bullish continuation triangle. And they're saying the rise probability is a 95. Sorry. My tea here. So the rise probability is a 95% chance. That's the technical analysis. Let's go look at them from a financial point of view. So advanced computing, integrated memory, and optimized LED. How's that business doing? It's down year over year. About advanced computing. So look at that. The advanced computing revenue is actually up 42% from the previous year. So that's actually some very nice growth. And we look at the net income, and they're profitable. These are great year over year comps. Yo, they used to lose a lot more money than they are now. So they're not really losing money anymore. This time next year, they're going to be making net income every quarter. So I can see, I like Ping. What's the revenue? Yeah, revenue growth is up 28%. So, and they're profitable. Yo, I think the risk reward might be pretty decent on Ping Solutions. Yeah, I like that one. If you don't give me 5 stocks, I'm unfollowing. Oh, that's not good. Hey, honestly, the best stocks I recommend are the ones that I own because I own them, but I might be biased on that. Like, I love McDonald's. I love Meta. I'm buying Google this week. I need more Google exposure because it's such a great company. So I'm almost for sure going to be buying Google this week. But yeah, here's my other portfolio, by the way. Someone said, show your Weeble portfolio. Yeah, this is my high growth portfolio. We haven't done great in here. We're up 12% all time in here. But yeah, we got some really good performers and some really bad performers. So yeah, I'm not an expert. This isn't financial advice. I don't sell anything. I don't got a course, a book. Watch out for people impersonating me. I'm just literally on here giving my opinion. So can you analyze CRSPR stock? CRSPR. Let's see if we can find that one. It's CRSP stock. Okay, I think this is what you're talking about. Yeah, CRISPR Therapeutics. I think this is a Kathy Wood stock. Yo, Trevor, how's it going, dude? So I believe this is a startup, and let me go double check you on that. They do gene splitting. So yeah, look at this. Look at that. Last quarter, they did 35 million of revenue, but this quarter it was only 800,000. So it looks weird. They don't have much revenue. And if we go to these net income losses, this is actually the bad news. They're actually losing a lot of money, like close to 100 million a quarter for the past year. They're a $4.5 billion company though. So that's 10% of the market cap. Okay, so yeah, since they lose net income every quarter, it's got to come from somewhere. So that's how you see those assets slowly declining. But right now, they're very financially sound because they have no debt at all. How much cash do they got? Wow, okay. $1.86 billion of cash with absolutely no debt. So literally 40% of this company's market cap is just their cash on hand. But you also got to be careful because they don't really have any revenue. Let me go to Kathy Wood's portfolio. Does she own that one? Kathy Wood portfolio. Let's see here. So of course she owns Tesla, Robinhood, Roblox. Yep, look, CRISPR Therapeutics, 3.75% of her portfolio. She owns Circle. Yo, Kathy Wood bought the Circle dip. I didn't know that. Yo, Shopify, this is my favorite Canadian stock of all time, just because the growth. I always look for growthy names, and if y'all heard of Shopify before, I used to have a Shopify store. Every time you'd sell something, no matter what plan you have, they're taking a 0.3 to 0.5% total transaction fee. And they must be making a boatload of money from that. And they are. Look at this annual revenue growth. This is what's the best part. 2018, it was 1.07 billion for the full year. So a billion of revenue. Now for the full year of 2024, 8.8 billion. You could just see the trend. It hits a new record every year. So Shopify, they're a huge growth name. So American Airlines stock. Oh yeah, hey, wait, we'll look at FUTU next. So this is American Airlines. This is just not a company I think you want to own. It I don't know about the future, but historically, this company will not outperform the market in the long run. Like, look at this chart. If we go into recession, it's super federally regulated. But if we go into a recession, the airlines get smoked. And look at that. That's why in 2019, they dipped like crazy and they haven't even recovered. They're pretty much still at the 2020 pandemic low. And the airlines are getting a little better now, but I know a lot of people just like to buy these ETFs with it's the S&P 500 with no airlines and cruise lines. Because look at this net income. It's just so choppy. They lost 400 million the most recent quarter, but the quarter before they made 600 million. So it's just a really choppy one. I don't know if I'd really have high hopes for American Airlines. That's like a fun one to trade, travel boom or whatever, tariff maybe, but I'd be careful about it. It's like a long-term buy and hold forever kind of stock. So can you do UNCY? Hey, you know what? Sorry, if I want to get to all the stocks here. I do apologize if I don't see yours. Okay, this isn't really a stock I like to talk about. $50 million company and the stock's at an all-time low. This doesn't really meet the requirements for me to really talk about this one. I don't want to give this one any they have no revenue right here. So yeah, if we go to revenue right here, this is from 2023, 675,000. They did no revenue the most recent quarter. Dang, the assets have shrunk. Yeah, that one's just extremely risky. Did I see DeepSeek? Yo, you might have saw I think there's we have a watch list over here. This app does. It's like the DeepSeek AI beneficiaries. Yeah, look at that. DeepSeek AI beneficiaries. I mean, I guess we can see what's in here. Why not? CrowdStrike, AppLovin, NetEase. Ooh, NetEase. Has anyone heard of Marvel Rivals? That's the company that makes Marvel Rivals. They partner with Disney. They're giving Disney a nice royalty, but let's see. Fortinet, big cybersecurity. Snowflake, Palantir competitor. Cloudflare, 20% of all global internet traffic goes through Cloudflare in one way or another. Another cybersecurity play. Atlassian, Datadog. So anyway, I like these watch lists right here. So someone said FUTU stock. So if you're wondering what is FUTU, this app that I'm on, it's actually a brokerage, but this app I'm on is this stock. This app I'm on is publicly traded, and this is their stock, ticker symbol FUTU. So why not see how my app or this app right here is doing financially? And let me just say, they're doing great. The PE is a 20, so pretty fair valuation. But look at this right here. This, it's in US dollars, is incredible. The net income doubled to 275 million. So the revenue's up 82%, but the net income's up 108%. So that means they're expanding their net margin. Great news, 45% net margin. That's crazy, 45% net margin. Someone said, what does PE mean? That's just the net income multiple. So the 20 PE means they trade at 20 times net income plus any stock dilution or share buybacks. So pretty much it's the net income per share. And if there's more shares that exist or less shares that exist, it messes with the numbers. But anyway, they do brokerage commissions, interest income. How much their interest income doing? Wow. That's what's nice about it. If you're a cash-rich company in a high interest rate environment, you get a lot of interest income. But anyway, that's cool. They just did a special dividend too. And by the way, if you want to get this app, this software I'm on, head over to the link tree in my bio. It's the first link there. You can download it. It's an affiliate link. We'll both get some stocks, and I'd like to keep my cash in here. Like if you look at the middle of my screen, I get the nice little interest. That's where I park it. But anyway, let's go. MU stock, Micron. Hey, then we'll look at Oracle. Yeah. So here's Micron Technology. This is an NVIDIA competitor. So if we go to this right here, the dividend, they actually have a 0.4% dividend. So not much of a dividend, but it's a growth company. Yo, Mad Pac-Man, thanks for the crab, the donation there, brother. So look at this. The computer networking business is huge, or they've seen some massive growth. It's literally up 97% from the previous year. That's incredible growth. And that's why the stock has seen a lot of recovery. Also, we can look at the storage business unit. That's up 7% year over year. So anyway, their main segment of revenue is growing like crazy. And if we go to the net income, the bottom line, this is the best part, the net income they're now making. Because if you scroll back to last year, I mean, look at that. It was a tough buy over here. They're losing net income every quarter and, over $1 billion of net income a quarter. Now, if we look, they're making billions in net income every quarter. So they've really turned around the margins. Great news. Yo, Jim Bro, what's up, dude? He said APLD stock. Yeah, thanks for the rose, homie. I appreciate you. So APLD is actually a stock that's owned by NVIDIA. Where's NVIDIA's portfolio? Here it is. So obviously, we know NVIDIA owns a lot of CoreWeave, ARM. Then their third largest holding is actually APLD. And APLD just went into a huge partnership with CoreWeave. Obviously, we think NVIDIA orchestrated that. But let's check this out right here. APLD, this is the best part about them. No one really talks about this. It's the cloud service business because they're a cloud service provider. It's seen incredible growth. The revenue was up 220% from the previous year. So at that crazy growth rate, 220% growth, what's it going to be this time next year? So, and with that new partnership with CoreWeave, it's going to be interesting. So I do like APLD as a growth company. NVIDIA does own some of them. And the revenue is just nice growing. They are still losing net income, but the growth is there. Yo, Ryan, how's it going, dude? What's up, homie? IoT, please and thank you. Yeah, we'll look at IoT. Oh, yeah, then we'll check out Oracle. So this is Samsara. Okay, this one is on my watch list actually. So they have been flat for a while. They've been flat since a year ago. So let's see what they're doing. So what's the PE ratio? Okay, so the PE is negative. So that means they must not be yet. So they're not profitable yet. So, but the trend is getting way better. Hold on. So look at that. The revenue is up 31% from the previous year. So really nice growth on the revenue. And they're losing way less net income than the previous year. 60% less. This is the trend you want to see. This is going in the right direction. And probably this time next year, they're going to be net income positive. So yeah, the cash from operations is really good, really strong. They must just have a lot of stock-based comp. Yeah, the free cash flow is really strong. Yeah, I do like IoT. They'll probably this time next year they'll be net income positive. So my cloud play is ticker symbol J. Let's check out Jacobs Engineering. And yeah, if you guys got any stocks you want me to look at, let me know. And yo, what's up, Brian? Chilling, big dog. Hey, that's what's up, dude. So Jacobs Engineering, a $16 billion company. So not too big of a market cap. So $16 billion company, there could be more upside potential. So infrastructure, let's see what they do. Infrastructure and advanced facilities. So look at that. So 2018, $6 billion. Now it's $10.3 billion of annual revenue. It grew 6.5%, not bad. Let's see, are they profitable on that? So they have been struggling in the two most recent quarters. Like, look at that. They actually lost net income, only $300,000. So not that big of a deal, but that is something that looks like it was a one-time adjustment because in operating profit, they made $200 million. So that's an interesting story that they like invest a lot in the company. I don't know. So either way, the revenue growth is there. Or I don't know. I got to do more research on that one. Nothing was really blowing me away there. I wonder if they pay a dividend as well. Let's see. Lyft went profitable this year. Oh, is that LYFT? I heard like Tesla, it'd be genius for Tesla to acquire Lyft. So let's go look at them. Yeah, dang, the stock is close to an all-time low still, so that's not great for Lyft. But let's go look at the financials here because that's what matters. So yeah, look at this right here. This is the great news. I mean, this annual revenue growth, I mean, it's literally up 31% from the previous year. So yeah, that's incredible growth. Looks like it's at a record right now. What about net income? So someone said they just went profitable. Yeah, look at that. They made net income in the two most recent quarters, or 3 out of the 4 most recent quarters, they made net income. And yeah, dang, look at that. This is why the stock got so heavily suppressed at this period of time. Like why they fall so much right here is because of these huge losses. They were literally losing a couple $100 million a quarter. But now they're finally looks like going to be this time next year, going to be making net income every quarter. So that's great news. I know the free cash flow is immense. Yeah, look at that. Wow, like 200 million plus easy of free cash flow every quarter. So the stock's at an all-time low, but the financials are at their all-time high, the all-time best. Soy said VRSN is, oh, this is a Warren Buffett stock. You know what? Let me go double check on that. I believe Warren Buffett just bought Verisign, and let me double check on that because could be wrong here. So, yep, look at this. VRSN stock right here is 1.2% of Warren Buffett's portfolio. So look at that. This stock is at an all-time high today, or pretty much. So congrats if you own this one. Let's see. What did they do? Oh, it's not going to tell us, but we can see the annual revenue right here. It's not crazy growth, like the revenue's up 5% year over year, but it just hits a new record every quarter. So that's the good news. They're still growing. Let's see. So yeah, revenue's up 4%, net income's up 3%. So you have a lot of liabilities. That's weird. But yeah, look at that. Berkshire Hathaway. So basically Warren Buffett is the largest shareholder. They own 15% of all the stock. That's interesting. But they're printing free cash flow, like 200 million. They're interesting. They're at an all-time high. Warren Buffett bought Kroger, MasterCard, then Q1. That's interesting. Can you check Champion Iron? Yo, what's the ticker symbol for that one? Maybe I'll type it in for you. Champion. Yeah, let me know the ticker symbol. I can't find that one, I don't think. So, oh yeah, you forgot about Oracle. Let's go check out Oracle stock. So this is that cloud play. So there was some rumors that Oracle would buy TikTok. I think there's now news that TikTok's gonna make a TikTok new app, like just for the US only. And, I don't know if that's going to work. People don't like downloading new apps and stuff. But anyway, Oracle, this stock is at an all-time high right now. So first off, congrats if you own this company. This is the main cloud play. So, SoftBank just had a huge partnership with them. So we look at where the revenue comes from. 85% of the revenue comes from their cloud and license revenue, cloud and license business. And if we go down here to the net income, I mean, they're printing money. Look at that. Over $3 billion of net income every single quarter. So that's some pretty nice net income right there. And that's how they can afford a dividend. Even though the stock is at an all-time high, what's the yield here? A 0.8% dividend on Oracle. So that's interesting. Ryan said CIA stock. CIA, Citizens. Oh, no, it's the Canadian ticker symbol. So check that out. This might be that clothing brand called Champion. So yeah, dang, they haven't been doing too good. They're the same price as they were back in 2020. So yeah, the stock hasn't been doing too good. I know just a lot of the apparel stocks haven't. So we're going to just switch the revenue from Canadian to US dollars just so we can better understand here. So, or wait, iron ore concentrate. So this isn't the clothing brand. Sorry. So this company is iron ore concentrate. So this might be a commodity play. Are they profitable? Yeah, they are. So, I mean, not much net income, but still they're making net income every quarter. Prospect, yeah. Hey, so this probably just relies on the commodity of iron. So yeah. Do you think gold should be in a portfolio? Yeah, it does. It's a nice defensive thing to hold. Yo, Boost, thanks for the lightning bolt. I appreciate that. So the thing with gold is whenever there's currency fears, war fears, inflation fears, gold does good. Gold does great, and gold is pretty much at an all-time high right now. So congrats if you own them. But historically, I forget, it's not on this chart, or maybe it is. But there was basically a decade of no growth. Yeah, from 2012 to 2020, it was negative the whole time. So you didn't get any gains. So the S&P 500 will do better than gold in the long run. Stocks will do better, but there's definitely a place. But gold doesn't have a yield. There's some gold mining companies though where you can get yield on gold, but there is a place in some people's portfolio for it. So MDB stock, interesting things, and the play would probably be as electric vehicles and battery adoption narrative. Oh, okay. I have a huge copper play. I have a huge copper stock in my portfolio. Ticker symbol APH. But here's MongoDB. I think this is a software cybersecurity company. Actually, let me check that because I don't know. So yeah, software infrastructure. So let's see. The stock isn't doing good, so that's not good. Let's see if we can figure out why they're not doing good. They're beating on they're beating on every metric, but the stocks are falling. So MongoDB Atlas related. Look at the growth here. This is incredible, actually. I do actually like this company so far. Revenue's up 26% from the previous year, literally at a new record. Yeah, look at that annual revenue growth. 2019, what other company did this? 60 million of revenue in 2019, from 60 million to 1.4 billion for the fiscal year 2025. I mean, incredible. Other subscriptions, yeah, hey, look at this other subscription. So subscription model company, but let's see. They're getting close to net income positive. So that might be why the stock's not doing too good, because they're still not making net income, but they're getting very close to making net income every quarter. So I really like the sales growth, and they just deleveraged like crazy. I'm loving MDB's balance sheet. So actually, I like that one. Is this Moomoo? Yeah, this is Moomoo. If you want to get this app or Moomoo, this software that I'm on, it's in the link tree in my bio. It's that very first link there. I love it for all the analysis you can do. So someone said, what's your thoughts on MSTY? So this is a covered call ETF. So you buy this ETF to maximize your dividend income. Because if you look at the yield, they have 132% dividend yield. That is great. I mean, that doesn't seem too sustainable. But basically, they just sell calls on a bunch of different assets, usually like Bitcoin or MicroStrategy. Or yeah, this is MSTY. So they're basically selling calls on Bitcoin, which gives you a huge premium. That's how you can get the huge dividend. But this won't outperform the market in the long run, but you buy it to maximize your dividend income. Let's see. I see a lot of hype over Oscar Health. Legit or overhyped. So this is a Medicare and Medicaid healthcare provider. And basically the stock fell on this day right here because the government basically said, we don't want these Medicare companies having these corporates making so much profit. And so the industry is at risk right now. But if we look at this company's growth, it's the best I've ever seen. And I do like this company's financials. With all those fears aside from the government, the growth is incredible. In 2020, the revenue was 580 million for the full year. Now it's 9.2 billion. I mean, what company is growing literally 9 billion? And it was 3 billion in the most recent quarter. Look at that. 3.05 billion just in the most recent quarter, up 42%. So they're taking market share from like a UNH or that Celestica stock, or I forget it. But anyway, revenue's up 42. They're still struggling with net income. They did make 300 million of net income in the most recent quarter. That's great. But the other quarters are struggling. But anyway, I do like this one's financials, but you got to be careful with the industry. You like United Health is getting hurt recently. So Soy said CEG stock. So this is one that I do own. So, hey, look at that. No way. We're up 0.5% in the overnight market. Hey, and it looks like it's from CEG. This one's having a nice little pump right here. So this is actually the main way to get exposure to nuclear energy. This company, out of all the U.S. publicly traded companies, this is the largest pure play for nuclear energy. They literally own about 50% of all the U.S. nuclear energy reactors. And so largest pure play for clean energy. They have a data center that just powers they have a nuclear energy reactor that just powers one Microsoft data center. They're partnering with Meta. Meta wants clean energy from Constellation Energy. They also just acquired a company called Calpine that's going to be instantly accretive $2 of yearly EPS. So that's literally going to add 50 cents of EPS every quarter for the rest of time. Anyway, so the PE ratio is going to go way down soon, but I love CEG. I might be biased because I own them though. Boo said, how about FD? I'm thinking with all these people betting they got to have. Let's see. Wait. FD. Let me know if you're talking about Face Drive. It looks like that's a Canadian stock. Let me know if that's the one you're talking about, and I'll check it out for you. Eric said, hey, Nathan, Tesla is getting pounded. Last time I did this, the stream I got regulated. Okay, I'll try it. Yo, Elon, brother.
Tesla to the moon. Tesla to $10 million a share. I love Tesla.
Okay, no, for real though. So Tesla, it's a tough buy right here. Most of their market cap is going to come from their robots in the future and the robo-taxi network. And literally just like a month ago, they started their first release of those robo-taxis in Austin, Texas, which is great news for them because right now the growth is kind of gone. Yo, what's up, Jello? Happy Sunday, guy. Yo, the first time I did that voice changer, literally the exact right after it said, your life contains themes that are uncomfortable and has been restricted, regulated goods content, and it says your stream will not be pushed out to new For You page. So thank you, TikTok. But anyway, I might not do that anymore. So thank you, TikTok. But the automotive business on Tesla is kind of down bad right now. It's down 15% year over year. So they lost the growth, 15% in the negative, not great. Also, if we go to the energy and generation business, it's seen some nice growth, up 66% from the previous year. So that is a little nice growth portion of Tesla, but the margins kind of collapsed here. Look at that. Net income fell 70% from the previous year. So if you go to the net margin, it was only a 2% in the most recent quarter. So Tesla's, it's like a mixed bag, business is shrinking, but also growing. No, dude, no way. No way. Spencer with the $5 super chat. He said, what do you think about leverage ETFs such as TQQQ? So here's the thing. And hopefully I explained this the right way. This is a trading vehicle. You always want to own this short term. So imagine this, for example. You put $100 in QQQ and you put $100 in this. And let's say the QQQ falls 30%. So your $100 goes from 100 to 70. But in a leveraged ETF, your $100, since it's 3x, will go from 100 to just $30 left. Wait, no, a 90% fall? No, you'll be at $10. So if it fell 30%, the normal QQQ, this would fall 90%. So, and then let's say the stock 3x's. So let's say right after that, then the stock 3x's. You're only left at the end of the day with the triple leverage ETF back at $80 when the normal non-leverage ETF, you'd be at like $250. So anyway, you want to be super, hopefully I explained that right, but you get what I mean there, but it's so tough. These are like a short-term trading vehicle. But yo, thanks so much, Spencer, for the $5 super chat. Thank you so much, bro. But yo, if you get those right, you can make a boatload of money on the triple leverage because the options are usually cheap on those. I think it's better to probably hold the QQQ. And here's advice for you. He said, QQQ, yo, Spencer, check out QQQM. It's literally the exact same ETF run by the exact same people with exact same NASDAQ 100 strategy, exact same everything, but it has a lower expense ratio. You've probably never heard of QQQM because they don't market it. Of course, they're not going to market this one. They're going to market QQQ, which has a super high expense ratio and make a bunch of fees off it. So if you're just looking for an ETF to buy and hold forever for the long run, check out QQQM. If you go to the fund's top holdings, it's exactly identical to the QQQ, and it's run by Invesco as well. Look at their top holdings: NVIDIA, Microsoft, Apple, Amazon, Broadcom, Meta, Netflix. Exact same NASDAQ 100 strategy. So that's pretty cool. Yo, Benchmark, how's it going, dude? Applesauce, what do you think of PL? Let's check it out. PL stock. Don't know if I've heard of this one before. Planet Labs. So, hey, look at this one. It's had some very nice stock price appreciation, and looks like they're at like a new 52-week high the most recent day, or multi-year high. So congrats if you own them. Let's go see what they do. So wait, let me click on industry. So aerospace and defense provides daily data and insights about Earth. Web geo platform with satellite data. Hey, that sounds niche. Well, let's see how the business is doing. So hey, they do have real revenue. Revenue's up 10% from the previous year. So that's a nice growth. Revenue's up 10% year over year, but they are still losing net income every quarter. 10, 20 million is not that bad. It's actually improved 50% from the previous year. So look at the balance sheet. Let's see. Cash, 226 million of cash, and I think they have no debt. Let's see. Total debt, where is that? Well, yeah, the basic no debt, 9 million. Yeah, so oh, whoa, hold on. I didn't know this. For ticker symbol PL, look at that. The largest shareholder is actually Google. They have a 10%, they own 10% of all the shares. So that's really interesting. So I technically have some exposure to PL because I own Google. So that's cool. Look at Sunrun. What's up, Mac? Let's see. Oh, yo, J Crump. Thanks for the 7 roses. Wait, we'll look at this one first because he donated. He said HLIO, and then we'll look at Sunrun. I got you, Mac. And yo, what up? So we'll look at DHR as well. I want to get to all the stocks. RKT, yo, that's Rocket Mortgage. So here's Helios Technologies. I don't know what a $1.2 billion company. So small market cap. Do they have a dividend? Yeah, so look at that. You get a 1% dividend with this company. So that's actually pretty interesting. So they do hydraulics. How's that business doing? Well, it's down 10% year over year. So, and electronics. How's that? Electronics is doing a little bit better. So it looks like the growth is kind of falling a little bit. So yeah, the lifeblood of the company. The sales are down 8% year over year, but the net income is down 20. They're still making net income every quarter. That's the good news, that they're still profitable. But no, that's really blowing me away here. I would be careful with this one. I could see kind of why they're the same prices they were back in 2019. So because it's probably because of the low growth. So Granny said, RKT, this is Rocket Mortgage. As soon as the interest rates go down, I think there's going to be a ton of refinancing for, houses. A lot of people can't buy a house right now because who's going to pay these 7-8% rates? Anyway, this is one thing you do got to be aware of, though. The short interest on the stock, literally 43% of all the shares are being shorted. So, if you're someone that likes or looking for short squeeze stocks, this one you can maybe add to your watch list. 40% of the shares are being shorted, so that's interesting. But I think as soon as rates go down, this is gonna rocket. Hey, remember, none of this is financial advice. I'm not an expert. I don't sell anything. I don't got a course, book, Discord. I'm just on here giving my opinion. I do appreciate y'all. So yeah, let's go back to Sunrun right here. I think that's ticker symbol RUN. A and H, you said, what about GAM? Yo, well, check out that stock after this. I got you. I appreciate y'all being here. Hey, if y'all want to help me out, don't forget to drop a like on the stream. I really appreciate that. Hey, thanks again, Spencer. So let's go pull up Sunrun right here. If it'll load here, hold up. Let me plug this back in. There we go. I didn't realize it disconnected. So this stock is up 16% the most recent day. But if we go to the market cap, 2.4 billion. They're not huge, Yo, practice Paul. No way, brother. Thanks for the rose, dude. I really appreciate you. Hey, if you got a stock you want me to look at, let me know. All right, so Sunrun right here. There's good news and bad news about this company. And part of the bad news is that my Wi-Fi is terrible and doesn't want to load this. So remember, this is a $2.4 billion company. Here's the good news. If we look at their customer agreements, this is incredible growth. There's very nice growth to this company. If we look at it on a quarterly basis, the revenue hit a record. It's up 25% year over year, literally to a new record. So record revenue, but here's the bad news. They're losing so much money where it's not sustainable. This company legitimately might go bankrupt. They lost $300 million the most recent quarter. That's over 10% of the whole entire company. They lost in net income. Not to mention the quarter before. I don't know how this is possible, but they lost $3.4 billion. I mean, that's the whole company. So I think this one, sadly, might just slowly keep on bleeding lower to lower and lower all-time lows. So yeah, it does not want me to. There's the weekly chart, but yeah, it's tough just because they're burning a lot of net income. It's just hard to trust them. So let's see. Oh yeah, DHR stock, is that DR Horton? Let's see here. I wanted to look at GAMB. Yeah. Hey, thanks, Ryan. I appreciate you, brother. So, this is Donna here. Okay, so this is an S&P 500 company. The stock hasn't been doing too good. Look at that. S&P 500 is at an all-time high right now. This isn't. Let's see if we can go figure out why, though, because usually we can figure out why in the financials. So look at that. They're in diagnostics, life sciences, and biotechnology. How's biotechnology revenue doing? It's up 5% year over year. Diagnostics, down 3%. Life sciences, down 3%. So they're not really growing. So yeah, that's probably why the stock has been struggling recently, because the revenue is actually down 1% from the previous year. So the lifeblood of the company, the sales are down 1%. And if we go to the net income, while they're still printing net income every quarter, they're making $1 billion of net income a quarter. The net income fell 12% year over year, which actually means their margins are collapsing. Margins fell 11%, but still they're really profitable. And if they can turn this around, that'd be great news. Thoughts on McDonald's right now? Yo, what's up, Chiro? I do own some McDonald's. This is a great, if you're looking for a stock that, that market's at an all-time high, McDonald's isn't. If we go into a recession, McDonald's actually does good in a recession. Did you know in 2008, this was the best performing stock in the S&P 500? And guess what McDonald's did? Because historically, McDonald's sales go up in a recession. People stop going to Chick-fil-A, people start going to McDonald's. And or from Texas Roadhouse to McDonald's if you're trying to feed a family for a little bit less. And they do good in a recession. And also, They acquired a bunch of cheap land in 2008. So look at that. In 2008, you go to any other stock, there was a huge dip. McDonald's never dipped. So historically, McDonald's is a recession resilient company. They're also a royalty real estate company. If you go spend $100 at any McDonald's, $4 of that goes back to this stock as a high margin royalty, sales and marketing royalty. And they also own a bunch of real estate. If they converted to a REIT, they'd be in the top 10 largest real estate investment trust in the world. So anyway, yo, Soy, no way, brother. Thanks for all the roses, dude. If you got another stock you want me to look at, let me know. I got you, brother. Is Moomoo good? I use Fidelity. Yeah, the Wealth Shift. I love this app right here for all the analysis you can do. But Fidelity's probably just fine as well. She said, have you bought IREN? Oh, dude, IREN is on my watch list. Oh, you want me to look at Okta? Yo, I got you. We'll look at Okta after this. IREN is on my watch list right here. I really like this company because of the growth. And I can understand why they're at like a 52-week high right now. Not an all-time high, but if we look at this kind of right here, they're at like a new 1-year, 2-year high. And I can understand why because of the growth. Yo, Luke, hope you're having a great Sunday, dude. Appreciate you, brother. Over here, the Wi-Fi is still bad, so nothing's new here. Sometimes... I don't know. So yeah, I want to load this, but it doesn't want to load. I do apologize. Because usually this doesn't happen. So yeah, here's the revenue. This is what I like so much about this stock was the revenue growth. The revenue grew 166% for the previous year. Incredible revenue growth. And they actually made net income the 2 most recent quarters, and quite a bit of it. $20 million each quarter. So I really like IRE. And look at this balance sheet. Monster balance sheet. $2 billion of assets. So I love them. All right, it's tough buying them at an all-time high, but I do like them. So Okta, he said, yeah, thanks again, Soy, for the roses there. And yo, Boost, we'll look at FLUT as well. I want to check out all of these if I can. If the Wi-Fi allows, we'll check them out. Hey, thanks, Chiro. I appreciate you, brother. Yeah, dude, McDonald's is one of my favorite just buy and hold forever kind of companies. I literally trust McDonald's more than like Google. Like if we think 20, 50 years out, like McDonald's is most likely a safer play than a Google, which is crazy. But here's, and I own a lot more in Google. I do own a lot of Google stock. But let's go check out Okta right here. I actually just started. I have access to this software. So, but here's what's so crazy about this company. This stock is at like close to like 52-week lower. You know, they're well off their all-time high. So stock's well off all-time highs, but the fundamentals are at all-time highs. This revenue growth is incredible. They have a subscription business, and look at the fiscal year revenue. I mean, that's incredible growth. It's $2.6 billion for the most recent year. And if we go down here to the profits, they're finally making net income. This growth is crazy because if we zoom out, look at that. They were losing hundreds of millions in net income a quarter. Now people are starting to take them serious. They're making net income every quarter. So that's the weird part. The stock isn't doing too good, but the financials are at their all-time best record. If you go to the FCF, which is free cash flow, I mean, they're printing free cash flow. So yeah, I do like Okta. I got to look into why the stock hasn't been doing so good. So look at FLUT. Let's see. So Flutter Entertainment. Man, I can't believe Krispy Kreme, my favorite donut place, about to go bankrupt. Yeah, Mac. I own Krispy Kreme, and I'm down a lot on Krispy Kreme, so I'll go show you that after this too. So here's Flutter Entertainment, 49. Wow, that's actually a huge market cap. So this is a $50 billion company. Let's see. So they're in this industry. So I don't really want to say this because I might get in trouble, but I think you know what that is. How's the? It's seen some nice growth. Yeah, let's go to revenue right here. So revenue's up 8% year over year. And the net income has exploded. They've really fixed their margins. Yeah, at this growth rate, they 3x the business. What's their net income going to be this time next year? So I do like this. I know there are some tax issues that are coming for this industry, but still, they're. What about free cash flow? Yeah, free cash flow is good too. So, XRP ETFs. Yo, what's a ticker symbol for one of those? I'll check it out. I've never heard of an XRP ETF. But yes, donut, invest in Krispy Kreme. I like that. So yeah, do not touch Krispy Kreme. Check this out. We own a super small position, but we're down 35% on Krispy Kreme. So luckily I didn't make them as a big position. But yeah, if you had to take a guess, how much do you think Krispy Kreme's worth? Well, they're only worth 560 million. And just for comparison, McDonald's is worth 220 billion. So this is literally 1/250th of a McDonald's. So and it's tough because look at this. They're losing net income every quarter. If you see that one quarter where it says they made 37 million, they didn't actually, because if you go to the cash from investing activities, they actually sold an asset to get that net income. So it wasn't real. So they've actually have been losing a lot of money every quarter. Organic sales are down 15% year over year. They lost the growth. They're burning money. They're selling off their assets. It's not a good look. And I can understand why that one's not done too good. What's up in our overnight market? Hey, Dave, SoFi, Reddit's up. I mean, barely. What's down? AMD, Disney. Yeah, the market's open right now. Let me go check the Robinhood account real quick. We'll see how we're doing. We're up 0.28%. What about the SPY? So yeah, the SPY's down 0.5%. Market's not too happy. Dang, hold on. The QQQ's just hit a new overnight low. It's not great, down 0.5%. Yeah, look at Google and Meta down here. They're kind of falling. Let's see, CLS and HIMS. Yeah, we'll look at those. So CLS is this Celestica? So yeah, this is Celestica. This is a Canadian company. And look at that. The stock is at an all-time high. So congrats if you own this company. You got to be up on your position. So let's see. So they're a cloud business, connectivity and cloud solutions. And then they're in advanced technology solutions. So let's see. Yeah, look at the growth here. That's a huge spike in revenue right there, but the revenue's up 30% from the previous year. So I can definitely see why this one's at all-time highs. And look at this net income. They're profitable every quarter. They're making, nearly 100 million of net income a quarter. So I can understand why that one's at all-time highs. It's probably tough buying them right here, but nice. Oh yeah, HIMS as well. So this company, there's good and bad news. Here's the bad news is that they can no longer sell their weight loss prescription. They partnered with NVO stock, which owns Ozempic. So HIMS originally had a huge partnership with Ozempic. Then NVO, on this day right here, this huge candle downtrend, basically abruptly canceled their partnership with HIMS over fraud or something like that. It was a terrible look for him. So they can no longer sell their weight loss prescription, which did make up a good chunk of their revenue. So the bad news is we don't know what the future revenue growth is going to be. But for right now, the revenue is incredible. Here we go. The revenue growth has been incredible. It's at a record. It's up 110% from the previous year. So the revenue has literally more than doubled since the previous year, the same quarter. And also the profits as well. Free cash flow is up 3x. Net income's up 3x as well. Look at they're going to be making $200-300 million of net income and free cash flow a year from now on. And they have no debt. They got lots of cash. They're earning interest on their cash. So it's like a mixed bag there. Be careful, NASDAQ futures. Looks like the bears are up. Hey, I mean, realistically, though, we need a healthy pullback because if we look at this includes our downtrend. Look at that. You can't even see the dip that we're at right now. So it's probably healthy that the S&P 500 will have a healthy RSI retrace, we'll call it. So yeah, it's fallen, but it hit an all-time high the previous day. So no biggie. I don't think anyone's worried. So TSM, Taiwan Semiconductor. So yeah, I love this company, dude. This is your main wafer market share company. Here we go. So the stock is at an all-time high right now. So kind of like NVIDIA. Yeah, congrats if you own them. The thing is with TSM versus NVIDIA. Oh, hold on a second. I mean, dang. Okay. It doesn't want to work, but we fixed it. So Taiwan Semi, this stock is at an all-time high right now. So congrats if you own them. This is like an NVIDIA competitor. It's basically NVIDIA with the higher yield. And they make these 5-nanometer wafer chips. They don't make GPUs, but they make chips. Like, look at this. They have a 1% yield. So even if you buy this stock right now, you get 1% of your money back in a dividend. So this is a dividend growth play. The PE is really cheap as well. Look at that, a 27 PE. So they traded 27 times net income. And look at their market share for these wafer chips. This is the great news. This time last year, it was a 61%. So it went from 61% to 67. So they're still growing their market share. Yeah, 85% of the revenue comes from these wafer chips. And also, this is actually the best part right here. The net income, the bottom line, they're making so much net income, 10 billion in all the most recent quarter. They're pretty much making 10 billion of net income every quarter. And then they just pay out dividends. They do stock buybacks. They can reinvest in the company, all without having to dilute you as a shareholder. So yeah. They make chips for NVIDIA and AMD. Yo, I got some AMD as well. Yo, Lulu, what's up? Or Lululemon stock. Let's check it out. So Lululemon, they just reported earnings and they did not give too great a guidance, and their margins have been falling a little bit. So that's why they had this huge red candle right here. It was because of their earnings. Dang, look at that. Actually, like they initially had this huge fall, and then look at that. They just kept on falling for the next couple like weeks. That's crazy. But we have had a recovery. So let's go check out Lululemon. We can see their number of stores. So check this out. Last year, same quarter, they had 711 stores. Now they have 770 stores. Interesting. So here was why the stock fell. If we look at the revenue right here. So the revenue, okay, thank you, Wi-Fi. The revenue, here we go. The revenue is up 7%. Yo, I'm probably about to end this stream here in a little. I appreciate y'all being here. Hope you're having a good Sunday. But the revenue is up 7% year over year. But if you go to the net income fell 2%. So revenue is up 7, net income is down 2. What does that mean? That means their margins are really getting hurt. I'm not sure if it's from tariffs or whatever. Yeah, dude, I'm probably gonna have to end the stream here. This Wi-Fi, I apologize. But if y'all want to hit the follow button, we go live every day, twice a day. And I'm streaming every Sunday. So same time right now, every Sunday, I do this same live stream. I like to do a weekend review. So yeah, if we go to the net margin right here, it fell 8%. That's the bad news. That's why the stock's falling. Anyway, I like Lululemon. It's kind of the whole industry. Actually, I would rather buy right now, instead of Lululemon, I'll give you stock I'd rather buy. I'd rather buy LVMUY. This is Louis Vuitton. They own, of course, Louis Vuitton. They own Hennessy, Moet, Hennessy like the drink. They own Dior. So they own a lot more brands than just like a Nike or just like a Lululemon. They own more than one brand, which I think it's nice to have a bit of a diversification. If we look at where this company's revenue comes from, 50% of it comes from leather goods, like their watches. But look at this, or their purses. But look at this, 13% of the revenue comes from their watches and jewelry. That's a high margin business. People love watches and jewelry, high margin business. And also perfume, cosmetics, another high margin industry. And then wine and spirits, Hennessy. How's that doing actually? Didn't look like too good. Coinbase, ticker symbol coin. Hey, let's check it out, Ryan, Coinbase. So I believe they just got added into the S&P 500. Let's see. So Coinbase right here, you'll like this stat right here because this app gives us a lot of cool metrics. So yeah, the stock has done amazing. I think they just made like some stable coin credit card. They like partnered with MasterCard or something like that, which is cool. But check this out right here. This is the best part about Coinbase. This is an important metric. Look at their monthly transacting users. It's 9.7 million. So I like it, transacting users. One thing is though, you don't want to trade Bitcoin or crypto on Coinbase. I think round trip, buying and selling, you're paying like close to 2% fees. So this is how they're making their net income though. They're printing money. Look at that. It's like that one quarter. If you average out the 4 quarters here, they're making like 400 million of net income every quarter. So they're printing money. And it's crypto exposure. If your Bitcoin does good, usually this follows that. It's like a Bitcoin proxy. But recently they've gone up with this new stablecoin partnership. So that's interesting. EA thoughts. Yo, Luffy, how's it going, brother? Happy Sunday. Probably watch some One Piece later tonight. Let's see. So EA, this is a company, I know they own like Plants vs. Zombies. They own a bunch of like games and stuff. I think they own 2K. I don't remember, but actually I could go check for you. But what are their most popular games? So Battlefield, they own The Sims, Apex Legends, Need for Speed. Oh yeah, they own FIFA, Madden, NFL, Star Wars brand. Okay, anyway, a lot of good IP. But let's go check out the financials because that's what matters. And they're really profitable. I actually really like that. Look at this. They're making easy 200, 300 million of net income every quarter. So they're really net income positive, and you get a dividend. Look at that, a 0.5% dividend yield. And look at that payout ratio. It's only an 18%. So they actually have room to raise their dividends. So yeah, I like that one. The Sims, Madden, A lot of people love those games. So Luffy said RHM. This is Rain Metal. It's actually a different ticker symbol because I like you. I'll type it in. Okay, RNMBY. So this is Rain Metal right here. They're an ADR, and I believe they're an aerospace and defense company. Yo, what up, Rahul? How's it going, brother? If you've got any last minute stocks you guys want me to look at, let me know. I got you in the YouTube chat and the TikTok chat. So here's Rain Metal. Let's go check out where their company's revenue comes from. So yeah, look at that. Vehicle systems. Then they're in weapon and ammunition. So yeah, defense, power systems, and electronic solutions. So I like how diversified that they are. So yeah, if we look at where their revenue comes from, notice there's no America on here, or actually right here. North, Central, and South America is 8% of the revenue, but this is a EU play. 50% of the revenue comes in the EU, and look at this. They're printing money now. They made literally 100 million the most recent quarter, and the previous quarter was crazy. They made 500 million, half a billion of net income that quarter. So they're extremely net income positive, and that's why the stock has seen so much appreciation. Did they pay a dividend right here? They paid $1.80 in dividends. $1.80 dividend. So it looks like they're making so much money that they're starting to return some money to the shareholders. Nice. Let's see, URI or, oh, yo, Isaac, what's up? ACMR. Let's see. This one's on my watch list. So that's interesting. And this app is saying, what is this right here? So there's technical analysis and then there's fundamental analysis. So let's see what the technicals say. It's a bullish continuation triangle. Usually it tells me the rise probability, but as y'all know, the Wi-Fi is just not good right now. I apologize. But anyway, let's go check out the financials right here. So they are single wafer cleaning. That's really interesting. So top semi-critical cleaning equipment. So they kind of like clean your chips. Single wafer chip cleaning. That's interesting. And they're making net income. This one's on my watch list. They're profitable. They're making well over 100 million of net income a year. So yeah. Do you trade on Moomoo or other? Yeah, I do. Well, actually, on Moomoo, I sometimes trade, but I mainly just like to buy and hold stocks in here. But yeah, this is the main app that I use. If you want to get this app, it's in the link tree in my bio. First link there. It's where I like to park my cash as well. If you look in the middle of my screen there, it earns the nice little APY. So yeah. Luffy said, what's your most recent purchases? So yeah, that would be over here. I just bought another share of FUTU. I just bought 2 more shares of TAP on Friday. But I've been talking about this stock for a while. This is actually my most recent purchase, as in a new stock that I've never previously owned. I bought this one a couple trading days ago. And yeah, we're about to end the stream here. I can't take this Wi-Fi. So yeah, look at that. We bought this stock at all-time highs, and then the stock just continues to hit new all-time highs. That's what we're seeing in like a lot of stocks right now, like a Dave, a Robinhood. The fundamentals are so good that they just keep on hitting new all-time highs. Yeah, there's my buy order. Literally bought this stock 3 days ago. The stock just keeps on going up. So if they're a good quality company, I don't always care about buying at all-time highs, but you don't want to have them as a huge allocation. So in my opinion, I would put PSIX on your watch list. I wouldn't buy them right now, though. TMUS is another stock I've been loading the boat on. We're only up 2.8% on this company. And look, here are all my buy orders, all those little B circles. Those are my buy orders. So we have 5 shares of T-Mobile at 234. They're actually a huge dividend growth company and stock buyback machine. So yeah, those are kind of the stocks I've been buying recently. But yeah, with that being said, I really appreciate y'all being here. I hope you have a great rest of your Sunday. If you want to help me out, the main way to support me, because I don't sell anything. I don't have a course, book, Discord, WhatsApp, Telegram. I don't got none of that. Only thing I do have is a YouTube channel. So if you want to help me out, go subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. And if you missed anything on the live stream, you can replay it. So anyway, have a great Sunday. See you later, Luffy. And everyone else, hope you have a great Sunday. And thank you for y'all on the YouTube live stream. I really appreciate y'all. Y'all are the real ones. You know what? Applesauce, if I already ended the TikTok stream. The TikTok stream is ended right now, but I got you. ANATNT. Oh, you're talking about ticker symbol T. So yeah, we just looked at T-Mobile. Here's a thing that you should know. We looked at T-Mobile. AT&T, this is a cool story. AT&T tried to buy T-Mobile. but it didn't get past the regulators. But part of the termination bill says T-Mobile has permanent access to AT&T's bands. So T-Mobile basically got so much value from AT&T being able to use their bands permanently. But that being said, AT&T is still doing great for themselves. If you look at the net income, I mean, look at that. The stock, I believe, is at an all-time high. If you go to the weekly chart, yeah, look at that, pretty much all-time high on AT&T. And, you get a 4% dividend with this company. So 1% of your money back every quarter. Let's see. So, I'll show you the numbers for yourself. I don't normally do this. They made $4.7 billion in the most recent quarter. So remember that. They made $4.7 billion of net income in the most recent quarter. And the dividend only cost $2 billion, $2.09 billion. So the dividend payout ratio is only 0.5%. So since they have extra money, they're doing, are they paying off debt? Yeah, great news. As we know, AT&T has a boatload of debt, but the debt is actually down 7% year over year. So AT&T is paying off debt as well. So that's the great news. But yeah, this is probably a good dividend play. I'd like them more than probably like a Verizon. Verizon has a great yield, but the one I think is going to grow the most is actually T-Mobile. And I'll be really quick about this. Here's what y'all are going to love. And I just like showing you the numbers so you can draw your own conclusion. Here's the best part about T-Mobile. Look at this net income, incredible growth numbers. It's $3 billion the most recent quarter. So remember that. T-Mobile's doing easy $3 billion of net income a quarter. Have y'all seen those Mint Mobile Ryan Reynolds ads? They're genius for T-Mobile. But Mint Mobile is owned by T-Mobile. But look, they just started their dividend. The dividend only cost $1 billion a quarter. So they make $3 billion a quarter. The dividend only costs $1 billion. So what are they doing with all that extra money? This is why T-Mobile stock is such a winner. They spend so much money buying back their own stock. They literally spent $2.5 billion the most recent quarter, way more than they spent on their dividend. The quarter before, they spent $5 billion buying back their own stock. So this is an incredible buyback and dividend growth company. So you literally own 4% more of the company than you did 1 year ago. So they have removed 4% of all the total shares. That gives you more net income per share, basically forces the stock to go up. So that's why T-Mobile has been such a winner recently. And that's why I own them. It's tough buying them where I bought them, but I didn't mind. I feel like this one's the kind of company that's just going to continue to keep hitting new and new all-time highs. And this one has a 1.5% yield. Not bad, 1.5% yield. So yeah. That was, hey, Ryan Domingo. Thanks so much, brother. I appreciate you. But yeah, I already ended the TikTok stream, so let me end the YouTube stream. Thanks again, Applesauce, for being here. Hope you have a great rest of your Sunday, everyone on the YouTube stream. I really appreciate it because the TikTok account keeps getting taken down, and I did the Elon Musk voice changer, and it got me, here, I'll pull up oh, I'm so stupid. Look.
Tesla to the moon, 1 million a share. I know. Does that even sound like Elon Musk? Probably not. I don't know. But
okay, sorry. Anyway, I'm going to end the stream. Thank you.